make money, I don't do shit else. Wake up, count racks, and I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't by the bag, I don't pick up this cell. Stack it up, flip it quick, I've been living too well. Walking, drip loud, whole fit disrespectful. Talking about money, little boy, that's my schedule. I don't got time for no broke ass lecture. You counting opinions, I'm counting extra. New chain coat, make your neck feel jealous. I don't say please, I just say send it. Bank account look like a goddamn fetish. Everyday payday, I meant that I said it. You flex online, that shit look pretending. I just hit deposit, that shit never ending. You worry about me, I ain't worry about nothing. I spent your rent on some dumb shit for fun, yeah. All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well. Hey, petty as fuck, yeah, I'm flexing on purpose. Bought the same chain twice just to make them feel worthless. You saving receipts, I'm just buying for fun. You waiting on checks, I got 10 of them coming. Bitch said she loved me, I told her I doubt it. You love how I spin, yeah, don't talk around it. I'm lit every day, I ain't asked for permission. I'm breaking the bank and I'm making new digits. Too many commas, I'm losing the count. You making excuses, I'm making it count. I walk in the room and it's quiet as hell, cause everybody know I've been ringing a bell. Money on my mind, I don't sleep right. If it ain't a bag, it don't feel right. You broken, you loud, that don't seem right. I'm rich and I'm rude, yeah, that's me, right? All I do is make money, I don't do shit else. Wake up, count racks, then I count that again. Broke boys talking, I don't hear what they say. Got your bitch on my line, she just want what I spend. All I do is make money, I don't do shit else. Middle finger up, yeah, fuck how you feel. If it ain't about the bag, I don't pick up the cell. Stack it up, flip it quick, I've been living too well.
Oh, brother, oh, brother, oh, brother. Buenos nachos, mi amigos, and welcome back to another episode of the Matt Kohrs Show, where I slightly readjusted my camera, so I hope you guys all enjoyed the new view. It is a beautiful Wednesday, August the 5th. Happy hump day to all of you who celebrate, but I think I can just sense a little bit more of a slightly different celebration going on in chat this morning for all the community. Happy all new time highs. Happy record highs to all of you who celebrate. The S&P 500 gapping up, ripping to a new record high yesterday. And actually, as of this morning, as I can see right here, apparently we're running it back again. We are gapping up once again and pushing a new record high again. The NASDAQ is following suit, not necessarily hitting new record highs, but it's looking very, very good, very, very strong. So the overall market and some of our favorite ETFs and indices that we trade are looking great, but not necessarily true for individual equities. We have certain high-flying individual stocks, such as Palantir, ripping 30% yesterday. But then there's other ones that I know a lot of us are watching, such as SpaceX and AMD, that had earnings and are getting crushed because of CapEx-related issues. So it's a little bit of a mixed bag. Depending on what you're playing or not playing, you're probably either really happy or not so happy. I'm getting a vibe that more of you are happy than not as you have exposure to the overall market and generally these popular high-flying individual names. But there are a couple names that I think there was a lot of enthusiasm, and all of a sudden the gust is taken out of your sale. So I want to dive into that. I want to break down what's going on in the overall market in terms of news, but also the structure and the technicals and the big player positioning. I want to talk about some of the recent news in terms of individual stocks. SpaceX, AMD had earnings last night, not so good. Fast forward to this morning, we heard from Shopify, they crushed it. We heard from Disney, CVS, Eli Lilly, Uber. So we have a couple other earnings to get into. So that's some of the just like the hot news and the recent movement. And then I got to prep you up for not only the structure on the overall market, but the major news of the day. We have a lot of service reports, 9:45, 10 a.m. We're going to be getting the S&P Global and the ISM service numbers. Then we have crude oil inventories as well at 10:30. And then right after the market closes, we are going to be getting an update from President Trump, most likely related to what in the heck is going on with Iran. And if time permits, I have an update on the situational awareness Leopold Aschbenner story. We have some more news. We have some developments, some details are coming out about who won, who lost. So I want to cover that with all of you because it seemed as if you guys had quite a bit of interest in that whole story. So I do appreciate you guys tuning in, joining me at the crack of dawn. We're up before the farmers. We're going into the digital coal mines of the world's largest casino, and we're going to put in a good day's work. And by that, I hope basically we make some good trades somewhere between 9:45, 10:15, get our money, shut everything down, and move on with our life. That's the plan. We'll see if we can stick to it. Your guess is as good as mine. But the casino's about to be opening, so let me do my job and prep you guys up. All right. As you can see, the S&P 500 is gapping up above the all-time high from yesterday. The Qs are looking really strong. And then on a completely different note, SpaceX and AMD are getting hit. So let me set the scene for you. Why is the overall market looking so strong? Well, as you can see from the title of the show, basically high hopes for the Iran deal, this time legitimately sticking. And hey, if you want to be a negative Nancy, you might be thinking, but Matt, the last 19 times we were promised that the ceasefire would stick, it didn't stick. Why is this time different? And I know this is going to shock a lot of you. I am neither a military or political strategist or expert. All I can do is comment on the fact that the market believes it. And whatever the market believes is actually where you're going to either be making or losing your money. So this is, for me, isn't necessarily a bet of is this time real or not. What I care about is does the market think that this time is real? And by the fact that we ripped to new all-time highs and apparently we're going to be doing it again today, I just care about what the market believes because that's where I make or lose my money. Iran is staking everything on controlling the Strait of Hormuz. Tehran's hardline approach threatens to destroy its economy and relations with its neighbors. So things are a little amped up depending on the publication that you read. Other things are seemingly a bit better. Trump fuels hopes for Hormuz opening with hints deal is close. So allegedly, we're getting an update yesterday or today. Obviously, it didn't come yesterday, so that kind of leaves us with today. And when I say we're getting a hint, Besant, the Treasury Secretary, when asked about what's going on with the intervention in the Japanese yen and why is the U.S. stepping in and blah, 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 we know that whole story. It's because of our own Treasury situation, and we're going to come out looking like the good guys, and we're going to probably earn a favor from Japan in the future. It's probably the first Iran-related bailout. But in that conversation on CNBC, the Treasury Secretary, Mr. Besant, said, actually, I think we're going to be getting a really big update as it relates to Iran either today or tomorrow. He said that yesterday. We didn't get it yesterday, leading us to today. And surprise, surprise, President Trump is scheduled to have a press conference at 4:30, 30 minutes after the market closes today. Trump says Hormuz deal could be agreed to Wednesday or Thursday as he hails very good Iran talks. So see, this is the classic Trump political thing where everything kind of gets shifted. Yesterday it was Tuesday or Wednesday. Today it's Wednesday or Thursday. I still think it's going to be today because Trump is speaking at 4:30. So I want to be clear about that. I still think it's this. But anyway, Setcom said the southern route of the Strait of Hormuz remains free and open, referring to a path through Omani territorial waters. This comes after the U.S. Treasury Secretary, Mr. Besant, said that the deal with Iran may come this week. U.S. President Donald Trump and others contradicted reports that U.S. missile stockpiles are severely depleted. Just to interject here, apparently we used all of our long-range missiles in this particular conflict. That's what's being reported. And then the President Trump says, no, that's not true at all. So a little bit of a side note there. Oil prices move higher after Yemen's Iran-backed Houthis claim Saudi tanker strike. So one of the best barometers for what's going on is not only the overall market, where yes, we did hit a new all-time high, but specifically the conflict is oil. And oil sold off thinking, okay, yeah, maybe this conflict is calming down. Then it started to rip once again. And then the recent news, you can tell if we're using this as a good barometer, and I would argue it is a good barometer for the tensions in the Middle East, oil is coming down. So, hey, I'm going to right now believe in what the market believes. Now, is the market always right? God, no. That's not what I'm saying at all. I'm just saying here for active day traders, swing traders, investors, we kind of have to care about what the market believes, not necessarily what we think is the highest odds of, I guess, a certain situation playing out. But remember, what's the old saying that there's some wisdom in crowds? The market is one of the best crowds ever to tell us what in the world is going on. So I'm going to believe it until proven otherwise. More specifically for today and for the remainder of the week, we did get the ADP non-farm employment change coming in a little bit less than expected. They expected 68,000 at 8:15 this morning, came in at 44. At 9:45, we're going to get some service numbers. At 10 a.m., we're going to get more service numbers. And then once again, President Trump will be speaking half hour after market closes today. Fast forward to tomorrow, the normal Thursday initial jobless claims, and then Friday, one of the biggest Fridays of the entire month. Remember, the first Friday of a new calendar month is when you get the job numbers for the previous month. So this Friday, basically an hour before the market opens, 8:30 a.m., we're going to be getting the non-farm payrolls and the employment rate. So pay attention to that. Obviously going to have big implications on monetary policy. Don't forget, we're also in earnings season. Yesterday, we heard from AMD and SpaceX. I'm going to be covering that. Did not go so well. Early this morning, we heard from Eli Lilly, Shopify, Uber, Walt Disney, Riot, Circle. The list goes on and on and on. Novos, Nordisk. So those are all pretty exciting. But for those of you paying attention to the AI trade, and it has a lot to do with Leopold, it has a lot to do with why the market's at new all-time highs. We're hearing from SanDisk and Western Digital tonight, SNDK and WDC. These are both very important players in the world of AI, specifically memory. So I want to call those out because they are reporting after the market closes today. Very, very important. Tomorrow morning, for those of you who care about quantum plays, D-Wave is reporting. And then after the market closes tomorrow, my sports gamblers, DraftKings, my people who don't like hotels, Airbnb. Side note, does anyone feel like Airbnb was the coolest thing ever, and finally we broke out of this world of hotels and we weren't forced to use hotels anymore? And now Airbnb has grown into a monstrosity of what it used to be, and it sucks. When Airbnb first started becoming a thing, I loved it. I would not stay in hotels. I found Airbnbs. They were more roomy. They were more spacious. They were just a better option. But over the past couple of years, whatever it's going into, it's horrible. It's absolutely horrible. The fees, the cleaning fees, the hidden fees. I guess that's my biggest issue is I feel like there's so many hidden fees that it becomes exponentially more expensive. And like the list of things that you have to do for them, the list of things that you can't do while you're there. Honestly, I went from being one of the biggest Airbnb supporters to recently, I'm like, this sucks. I don't even think about checking it anymore. It just kind of actually pisses me off. It's kind of sad. In a weird way, it's kind of like streaming services when we all hated cable. And then all of a sudden streaming services came along and you're like, great, I don't have to deal with ads. It's a cheaper fee. And now by the time you use all the streaming services and some of them are even interjecting ads on you, what's it? Amazon Prime, I believe is the one that I have where I'm paying for it. And then yet I still have to watch ads. But by the time you add up all the main streaming services, the fees itself have actually now exceeded cable to begin with. So it feels like it's a similar thing where it started out so strong, but then to survive in the business place or maybe for another reason, it actually turned into services that I just like completely hate. Inshitification. I think that is the economic term for it. The inshitification. But anyway, Airbnb, Rigetti, that is going to be another quantum play. Fast forward to Friday, a nuclear play, Oklo, Games, T2, Take-Two Interactive, Wendy's is also reporting. So we are still in earnings season and we will be next week, just so everyone knows. So Rewinding a little bit and then jumping forward a little bit. SpaceX's spending spree is supercharging AI revenues. Elon Musk-led rocket company spent $15.8 billion on AI projects in the second quarter and doesn't plan to slow down. So some companies are being rewarded with increasing their capex. Other ones are getting punished. SpaceX is in the latter category of getting punished. So it had earnings. I want to clarify, SpaceX did beat on top and bottom line. It beat on its sales, and obviously we had good growth in the Starlink sector, not as much as the whisper number expected, but still it beat. And then in terms of its loss, it had a narrower than expected loss. So it beat on its top and bottom line, but because of the Starlink thing and because of this CapEx thing, that is why it is currently down 11%. Honestly, the trade there was to bet on in during the earnings call, Elon Musk saying the word NVIDIA. That was the best bet, not necessarily on the stock. SpaceX dies 12% after AI spending surge rattles investors. Once again, concern over CapEx, which is the same thing going on with AMD. AMD is dumping. Once again, this did beat, going the way of SpaceX. It beat on top and bottom line. It beat on EPS. It beat on sales, aka revenue. And right now in pre-market trading, it is down a healthy 8%. Ouch, that is painful. Right here, you can see CapEx really going up 389 to 808. And once again, some companies are getting rewarded for this and leaning into AI. The market really likes it. And then other companies such as SpaceX, such as AMD, Google at one point, Tesla at one point, actually getting punished for it. Fast forward to this morning, Disney tops estimate earnings, parks and streamings offer a boost. CVS blows past estimates, hikes guidance on insurance unit continues to improve. Eli Lilly easily tops quarterly estimates, raises outlook for Zepbound, and Monero sales surge. So I guess people are trying to still lose that weight. The other one that I didn't cover that is actually looking really good this morning is still Shopify. Shopify up 21%. Closed out the day at 123, currently trading at 149. Uber was another one. Uber down 2.8%. How much is Disney trading at right now? Disney is actually up 4.5%. And then Novo, yeah, those are warrants. I don't want to look at that. So, okay, well, another batch of earnings. So I just wanted to cover that. Remember, if you need a little cheat sheet for all the major happenings, don't forget to sign up for the newsletter. It is 100% free. I know I say that a lot. I know I sound like a broken record. I know I'm riding a dead horse or whatever the hell that saying is, but sign up for the newsletter. There is no risk to you. There's no secret sign up or anything like that. It's 100% free. Comes to your email inbox every single Sunday. I break down what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events. 9:45, 10 a.m., and 4:30 p.m. is what you should be paying attention to today. And probably most useful is the seasonality of each individual day. Basically, I crunched the numbers on the better part of the past 3 decades worth of data to see if we can get a general trend of what that is. And even though we're gapping up right now, I do want you to know that this day does favor the bears. Now, does that mean it's going to be bearish? No, there are clear years where it goes up, but this overall does favor the bears. And this hypothetical equity curve is what you would have if you bought it open, sold at close on the S&P 500 futures market. So if you bought at 6 p.m. and then sold at 5 p.m., that's how I crunched all these numbers. And for a bit, it was flat. Recently, it's a bit more bearish. The start of August and really the whole month of August, from a seasonal perspective, is quite choppy. But maybe this year is going to be a bit of an inverse because generally July is a nice bullish month, and this year was actually a choppy month. So maybe those two are going to flip. That's totally possible. Tomorrow, it is leaning a bit more bullish, and then so is Friday to conclude the week. So just wanted to share that with all of you. A little bit later, I have an update on Leopold Aschbrenner and situational awareness and how he's probably enjoying his honeymoon right now, but he basically just blew up his entire fund and lost people billions and billions of dollars. We're going to circle back to that, but first, I kind of want to get you guys prepped up for maybe some day trading stuff or some key level stuff. So if we were to open right now, we are currently trading at 7779. If you look at that, that is above yesterday's high. Yesterday's high, which is the all-time high, is 7758, taking out the previous high at 7620. We did that in one day. The all-time high at 7621 stood for quite a while, June 2nd, and then to yesterday, we gapped above it and pushed all the way up to 7758. blowing away my expectations. I thought the best we would see yesterday, and we even said this on stream, was 7,700. I deeply believe that. And we just got caught up in some negative gamma. Someone got blown out of their short vol position. Vol expanded. It happened to be with momentum to the upside, and the market ripped it. And we just kept going to a level I would have never, ever predicted. I will happily own that, because what happened yesterday is a multi-sigma move. It is not something to commonly bet on. Anyway, that brings us to today, where we are currently in pre-market trading at 779. Yesterday's high, was 7758. We are setting up for another gap up. That's not technically true in the Qs. The Qs are at yesterday's high. And then what about the Russell? What about the small cap sector? Technically, there is also a gap up, a small one right now. So across the board, the overall indices are looking really strong. Obviously, individual equities, some of them not looking so good, while others are looking amazing. Palantir ripped 30% yesterday. That's disgusting. And it's holding. Palantir is looking absolutely crazy. And I mean, look at the daily chart on Palantir. It almost looks like a joke. Look at that. The stock doing absolutely nothing. Got hit. Huge just range-bound accumulation. People waiting for earnings. Look at that bar. And now you're looking for a triple, quadruple top breakout, actually maybe a 5-top breakout here in the mid 160s. And then maybe from there it can go to 180. I don't actively have a position on Palantir. I want to be transparent. I do have it in my long-term investment. So I was very happy to see this, but 29% in one day. That's just crazy. That's crazy. And if you saw the numbers, it's just because they crushed it. Their gross margin is phenomenal. Their revenue is phenomenal. Their growth is phenomenal. It's to the point where it was so good, it makes you wonder what everyone was doing in here, because the numbers in these earnings honestly were not that weak. Now, obviously, the most recent numbers were a complete blowout, and that was amazing. But in these numbers, it makes you wonder, like, what were people seeing or trading? A little bit crazy, if you ask me. You know what? While we're here, let's look at some individual equities. So we know the SPY gapping up to new all-time highs. There's now 2 downside gap fills. Be cognizant of that. Remember, the odds, I know it didn't get filled yesterday, but the odds, whenever you see a gap, the odds are very high that the gap does get filled. The Qs, as of now, has a small gap down, so something to a little bit pay attention to. Same thing on the Russell. Bitcoin may be putting in a higher low, maybe trying to break out. I'm watching this 50 EMA. The last time it tried to get going, it did not go so well, but hey, maybe it just needed a little bit more enthusiasm. We already spoke about Palantir looking for the 5-top breakout of the 160s. SpaceX getting hit. Like I said, I am a fan of SpaceX. Their earnings were good enough, I suppose. I say that hesitantly. I like SpaceX, but I'm not buying it here. This is more of an IPO issue than a company issue. I believe between Starlink and then years from now, when they're launching rockets, according to Elon, every single day, and they're building out factories on the moon, I think this company will crush. I deeply, deeply believe it. I just don't think now is the appropriate time for me to get involved. If you want to rip it, I wish you the best of luck. But as a person who studied just how big high-flying tech plays react to their initial IPO, you have to have the patience to wait for a couple months for that first investment. AMD getting hit. It's really not gone quite yet. I mean, it's still near that 50 EMA, so I think it still could be fine. I'm going to be watching it, but I just don't find it as that interesting of a play. Meta, I've said this many times, in terms of high-flying tech plays, I believe this is one of the most undervalued plays in the entire market at this moment in time. Meta, I keep adding it to my long-term account. I know I sound crazy. I know I've been saying this for months. I know the stock hasn't really gone anywhere, but I deeply believe that they're going to crack the code of what they should do in the AI space. And before you know it, this thing will be back above $800. I think it's going to take time. I think it's going to take patience. I'm not playing options on it. It is in my long-term account, so I'm more than willing to wait the time. Not really doing anything right now, but based on its sales multiple, based on its price or earnings, like, I think it's just one of the most undervalued plays. I thought that about Microsoft as well. I was adding Microsoft, and look who was right about that one. Apple was recently the most valuable stock in the world, the most valuable company in the world, I should say. Well, I guess stock too, based on market cap. The earnings reaction caused it to get hit, and it dropped to number 3. Right now it goes NVIDIA, Google, then Apple as of yesterday's close. Looking maybe at this upside gap fill, I have no active Apple position. I am invested in it. Tesla getting recently destroyed, lower highs, lower lows. I still like it in the long term, but right now the active trade would be to the downside, but I should call out there is an upside gap fill. Micron, this is a big play in terms of the memory, and let's see if it can actually recover now. If it breaks above 933, that's interesting. If it breaks below 769, that's probably a lot of pain. SanDisk, similar situation, huge ripper, lower highs, lower lows recently, so the trend didn't switch. But the question here is what's going to be going on with its earnings. It does report after the market closes today. Intel, this is the main AI play that the U.S. government's also involved in, looking pretty good, recently changed trend. Can it recover? Can it get this breakout above roughly 110? Amazon, really good earnings, pumping up to new all-time highs and holding pretty well. Google getting hit on its earnings, and then everyone realized they had their head up their ass, and the CapEx that they were doing was actually a really good thing, and then we quickly ripped, but just this little downtrend here did not stop me from taking a hit on one of my active Google plays. Still have it in my long-term account, but in terms of active plays, I personally did miss this pump back to the upside. NVIDIA's range-bound double bottom, it looks like this is a decent amount of accumulation. We might get that classic W pop, so I'm looking for this break, which we're kind of already seeing this morning. So NVIDIA is on my watch list, but I might have already spent too much money on Broadcom. I'm looking for a lead play on NVIDIA or Broadcom, and I did execute it on Broadcom yesterday. Just I like the setup a little bit better, but honestly, I probably should have done it on NVIDIA as well. So just wanted to share that with you. TSM, another one that looks like it's knocking on the door of a breakout. Hut getting hit, not much there. Lam Research knocking on the door of a breakout. Marvel knocking on the door of a breakout. ASML knocking on the door of a breakout. Rumble, they're going to have their earnings on Monday. I'm going to be there doing a little bit of an interview with the founder, CEO, and chairman, Mr. Chris Pavlovski. So put that on your calendar once again, Monday after market close. Salesforce recovering. Netflix still looks like shit. Oracle maybe trying to break out. I think that this one's going to fail. I would not be chasing that. If anything, I would be fading it. Texas Roadhouse hitting a new all-time high. CoreWeave getting absolutely destroyed, but in the past week, making a nice recovery attempt. Coinbase, a little green yesterday, but overall getting destroyed. Same with MicroStrategy, a little green yesterday, but overall getting destroyed. DJT going green on the fact that I guess a lot of Wall Street's going to be paying the $100,000 a month. AMC looking strong, could be a double top. Remember, this is just a pump and dump scam, pretty evident. TLT, yields are going up, bonds are going down. Silver getting a little bit of life. I think it gets faded. Gold, same thing. A little bit of life. I think it gets faded. Oil, same thing. A little bit of life, but this one's clearly weaker. So we can return to some of these penny stock pump and dumps. Jesus, Amex is up 434% yesterday. This is another very evident pump and dump scam, just so everyone knows. Don't get caught up in chasing those low pumps. All right, so that's your breakdown, and what do I have? About 30 seconds left. So while I have 30 seconds left, my question to all of you is from market open to market close, are we going up or down? From 9:30 market open to 4 p.m., are we going to be bullish? Are we going to be green? Or are we going to be bearish and some people are going to lock in their profits? What is everyone's best guess? You have to put in your guess before the market opens, or it's cheating. You're not allowed to know the opening print if you're answering this question. You are not. You have to answer up, and away. Up, going up. We got a lot of bulls in chat. And on that note,
Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun.
all right, Palantir ripping, SpaceX getting hit, market popping to a new record high, still has a downside gap fill, and the Qs still have a downside gap fill. So SPY has a downside gap fill to 773.41. QQQ has a downside gap fill to 725.66. So both the SPY and the Qs, and actually the Russell as well, all have downside gap fills, something to be paying attention to out of the gate. With respect to momentum, the 1 minute, 5 minute, 10 minute, 30 minute are all bullish on the S&P 500. Looking at the NASDAQ 100, 1 minute, 5 minute, 10 minute, 30 minute is all bullish. No surprise to anyone. These are my key levels of the day. For those of you who care about the big player positioning, obviously my first target is 90 and really 800 in here. You can see that's a pretty evident level. Lots of negative gamma above and below. There's a bit of a positive gamma node here at 7820, 7825. Really it starts at 15 and it goes up to 25. So I see a bit of a positive gamma node there, but there's negative gamma above and below. And then when you get really deep, basically just above 7700 is where you kind of see a sea of positive gamma. So that's clear support. And while we're above that, we could get big ranges in any direction. But once again, coming back to my key levels, feel free to write these down. Feel free to screenshot them. I wouldn't be so surprised if we pump to 800. There's a little bit of profit taking there out of the gate. The question is, are we going to hold above 800 and then move to 25 and then 40, 825, 840? Those would be my reach targets. If we get rejected here, obviously I'd be looking for the downside gap fill at 758. Then I'd be looking for a push if that keeps going somewhere between 745 and 736, yesterday's closing value. And then from there, you have 725 and 7700. So this is my bull case. This is my bear case. I believe all good traders should have both cases mapped out, so you know what the two sides are looking for. Because remember, as traders, our job is not to predict what's going to happen. Our job is to react to what's happening in front of our face and seeing if we could ride with the flow of large players, make a bit of our money, and then move on with our life. I deeply believe that is the best way to engage with the market. We already took out the overnight high on NQ right there. The high was made at 2:10 in the morning, and that was at 990. So we still have 30,000. And then the overnight low is at 29,776. So we have some key levels there. Like I said, we already did pierce the overnight high. I'm curious if buyers are going to be stepping in here at 932. These 1 minute bars already have 50-point plus ranges. So we're already getting some serious size. Here's a look at options flow out of the gate. We don't have that, like it's only 3 minutes of trading, so we don't have that much data, but just to show you the opening prints, a little flat, a little down on the S&P 500. Mag 7 a little down, swinging up as we speak. The NASDAQ a little flat, little up. And then the Russell is actually straight down out of the gate. Shout out to TPT. They are the partner of today's show. I myself am trading on some TPT accounts. I have one funded account that's up 1,100, and then I have one eval. And actually, I have a lot of past evals. I'm just waiting for enough time to pass so I could actually trade them. But what's so nice about TPT, there's no consistency rule, there's no activation fee, and there is no like you can get your payouts daily. There's no time frame that you have to wait. So basically, daily payouts, no consistency, no activation fee, and you can get 40% off with that code Goonie. So that's why so many people of you like it. I'm not sure if in this community TPT is the absolute favorite, but it actually might be, just seeing from how many of you talk about it, seeing how many of you use that code Goonie. So it's up there. It's definitely a top 2, top 3 one for all of you guys, but it's for good reason. Daily payouts, no consistency, and no activation fee, and you get a fat 40% off, which means you can get rocking with a 50K account for like $100, and then there's just no more fees past that. And then when you do pass it, knock on wood that you do pass the eval, go to funded. From there, you could just get daily payouts. So shout out to TTP, Take Profit Trader. Use that code Goonie. And then also, just so you guys know, if you want to trade with me, that's exactly what the Goonie Trading Discord is for. GoonieTrading.com. If you have any questions or anything about what it is, what it isn't, come to the contact page. But for those of you wondering if it's worth it, well, here's my real-time posted trade yesterday. Not only did Piper hit on a little bit of a streak, but here's proof of my trades when I got in, when I got out. Ask anyone in the Discord. These were all posted in real time. My SPY play, I ended up making 10,000. My Q plays, I made about 7. So in total, I made 17,700. I entered the play on the 30th and finally finished my scaling out yesterday. So couple day hold, made about 18K, paying for almost 18 years of the service. So if you think it's worth it, I mean, I would argue very much that it's worth it, but obviously that is up to you in your opinion. And like I said, if you have questions, feel free to ask. If you want to join on a coupon code, maybe you'll be able to catch me in a good mood. Maybe I'll give you a coupon code. Maybe I won't. It probably depends if I'm making money or losing money that day, honestly. So just wanted to call out everything going on. Want to trade with me? GoonieTrading.com. You want to sign up for a futures sim to funded account? TPT is the partner. Use that code Goonie. If you have any questions on the Discord, use the contact page. If you want to join, but you want to see what it's about, maybe I'll give you a coupon code. I don't know. Like I said, depends on the mood that I'm in. A better time for you to ask legitimately is if you saw me win money that day. If you saw me lose money that day and I'm fighting with either like ICT dipshits or AMC retards, probably don't ask that day. Do a little bit of social engineering, like probably vibe it out and be like, is Matt in a good mood or is Matt probably not in a good mood? So just a little bit of insider baseball of how to get something from me. Probably going to happen more likely if I'm in a good mood. All right, we're 6 minutes into the day. Market did pop a little choppy. Remember, there is negative gamma all over the place. We could easily pop up. We could easily sell off. Looks like spot gamma is calling out the implied one-day move high potential is 845. The implied one-day move low is 7720. That's 125 points. We are looking like there could be some serious movement on today, and it looks like we already have a bit of profit taken right there. Remember, the Qs already hit their downside gap fill. The SPY still has a downside gap fill. If you're looking on SPX, that would be the high from yesterday, which is right here, 7758. That's the downside gap fill. And then there's another downside gap fill all the way at 7610. It's not likely that that's going to get hit today. Not only is it pretty far away, that would mean that from this moment, we have a 2% sell-off. Why I think it's more unlikely is because the amount of positive gamma that starts at 7,700. It's just too much of a buffer. Now, obviously, things can change, and obviously, the map would change with new trades being made. Just commenting on what we're currently seeing. If we sell off, I don't see us going much below 7,700 today. But yesterday, I didn't see us breaking 7,700. And then I think someone blew up a volatility-based hedge fund. I think someone was short a lot of vol, and the vol expanded and got blown out. And then that ended up pushing us higher. Yesterday was crazy. Absolutely crazy. Did Matt win his call sheet bets, or did he not hear Mars? I won 2 of 3. I didn't win the Mars one. I won the Starmine one, and I won the NVIDIA one. But the NVIDIA one was the big one. That was the one that I bet 750 on and won 1,000. The Starmine and the Mars bets were both smaller. I won one, lost one. So between those two, slightly net negative. But the big winner and why I was overall net positive was because Elon Musk, during the call last night, did say the word NVIDIA, which it made me feel like an insider trader. It made me feel like a high-frequency fund. I mean, we saw the big tweets. Everyone and their mother was tweeting that there's a new partnership between SpaceX and NVIDIA. And then going over to the call sheet market, it was a 60-40 odds, a 65-35 odds that he would say NVIDIA. I was like, dude, they literally just announced a partnership. How would he not be saying it? And he said it multiple times, and I crushed it. So for the first time in my life, I felt like I was front-running information that other people didn't piece together, and I was a big fan. Big fan of that one. All right. Market right now is choppy. We're not really breaking 90. That is a key level. So is 800. If it cracks 71, I'd be looking at 65, but really I'd be looking at 58. If we take out the current intraday low at 7771, my next level is the downside gap fill at 7758, which, Sean, what are the odds of that gap fill today? Sean is my tech whiz in the Discord, always helping me crunch some of these numbers. Sean, can you put that? I could probably find it. What are the odds? Fill odds. No. Close. Which? No. 60, I'm seeing 67% chance. Is that right? Am I doing my math right? 67%? 60, I believe it's 67% if I'm reading it right. So more likely than not that we will be getting this hit to 7758. Not a guarantee, but for those of you playing odds, well, there was a big pop. It's kind of a tough one because there might be people today just positioning for the Trump announcement tonight. If you're just joining in, first of all, welcome. Second of all, demerit, you're late to class. This show starts promptly at 9 a.m. It's a little bit rude that you're joining right now. But like I said, thus far, I'm in a good mood because I haven't lost money yet today. So I just want to remind you that today, after the market closes at 4:30, President Trump will be speaking, probably related to maybe the Iran deal. Also, after the market closes, we're hearing from SanDisk and Western Digital. These two stocks are very much going to be thought of as like what in the world is going on in the world of the AI, specifically the memory trade. So SanDisk, Western Digital reporting after the market closes. Also after the market closes, President Trump, he has a scheduled speech, probably going to give us an idea of what the hell is going on with Iran. SPY daily gap 61%. Okay, so in the 60s. So more likely than not, but not a guarantee. And I do know from doing a bit of research with him that the odds of it happening in the first hour are the highest. And if the gap doesn't fill in the first hour, the odds do start to drop. So just wanted to share that. Twice today, Trex, too many times mentioned. Wait, what happened with Trex? Did I miss something? How many demerits until we are suspended? Chris, you don't want to know. Actually, speaking of Chris's, for those of you who were there for the SpaceX stream last night, we streamed the earnings. We were attacked by a Chris army. It was crazy. For anyone who was there, back me up on this. It seemed like every single person we were talking to was named Chris. Like it was an entire Chris attack. And I have to admit, I'm a little shaken by the whole thing. I am a little shaken by the fact that out of nowhere, I didn't know Chris's commingled like that. I didn't know Chris's got along and had like, it was almost like watching what's called a, you know how like it's a murder of crows or a school of fish. Like what's it for like chimps? Like what's a group of chimps called? A group of chimps called a troop. We saw a troop of Chris's inundate the chat. It was a troop. We had a troop of Chris's come out of nowhere. And I didn't know that the troop or any troop of Chris's had so much forethought to be able to gather in a digital community like that. Like I said, I'm shaken. Legitimately, a group of Chris's is called a cross of Chris's, a crisscross. That's actually hilarious. I love that. I like that better than a troop. A troop is a group of chimps, and that was kind of reminiscent because that's how I view all Chris's in my life. But I like that better. It's a cross. It's the old crisscross, a gaggle of Chris's. My parents named me Chris because they thought Mike would be too common. You hate to see it. All right, market just popped above 30,000 on NQ. Starting to cook a nice little save here at the 50 and the 100 EMA. If you took that buy at 947, I don't mind it for a quick little 1-2 minute trade. Obviously, please be aware that there is a report coming out at 9:45, the S&P Global Service Report, and then at 10 a.m. we have another report. So just be mindful. Obviously, if you caught that long, maybe you want to get your stop to break even or something. I wouldn't want you guys to somehow turn a nice winning trade. I mean, you're long at 950. It almost hit 350. You're up almost 100 points. Don't let a nice winning trade somehow turn into a losing trade. The S&P 500, as of this moment, double top rejection at 790. That is a key level right here, 790. If it keeps going, I'm looking at 820. If it keeps going, I'm looking at 820. I need to update this. The gamma map has shifted a little bit. So if it can get above this double top, and of course you don't want to clear just profit taking rejection at 800. From there, I'm looking at 820. Thus far on the day, the Nasdaq is nicely climbing. Mag 7 was climbing, starting to give some back, a little bit of divergence. Price went higher, but options are selling off, so a little bit of hidden divergence there. And the S&P 500 looks like a legitimate roller coaster. Flat, down, big spike, flat, and now dropping once again. So a little bit of a messy opening on the S&P 500. You're kind of seeing that in price. A decent fake out recovery there on the Qs with a nice pop, but I think we have to wait for these numbers and probably wait for the 10 a.m. hour to pass to see what the big institutional players are wanting to do. Speaking of big institutional players, I think this is a perfect time for me to give you guys an update on the biggest story that we've had in a bit. If you don't know who Leopold Aschbrenner of Situational Awareness is, well, he's on the screen now. He's previously been described as a whiz kid, as an economic prodigy, a person who just recently famously turned $225 million into $45 billion and then turned that all the way down to zero. This was the biggest story of situational awareness getting absolutely bodied by Ken Griffin and Citadel. And it's a story that is kind of as old as time, too much leverage. That's what's going to ruin you. But it's just the newest one of it. So a lot of people are talking about it. Now, if you want all the dirty details, I do highly recommend you watch the most recent video on it right right here. Citadel crashed an AI hedge fund and made billions. This is the best breakdown. So if you don't know what I'm talking about, watch that. But the reason I'm talking about it now is because we have a big old update. So quick recap. This kid, Leopold Ashbrenner, was running situational awareness. He started it in 2024 with $225 million. And then as of 2026, he was kind of the guy on Wall Street because he had a 400+% return. 225 million to 45 billion, then gone. So that's just the high level story of it. Since I made that story, breaking it down, and remember, it's Ken Griffin who made billions, and that's really going to be an emphasis of this video. How much money he basically made a couple $1 billion in a couple trading days, which is absolutely insane. But on top of that, other interesting things are starting to happen, and I'm seeing where this is kind of being spun. So if you look at TBPN, here's the full letter Leopold sent his LPs last night. Rumors of his demise are greatly exaggerated. Now, let me connect a couple points. Do you know who TBPN just got a bunch of funding from? OpenAI. OpenAI is where Leopold used to work. Also, on top of that, they have a lot of connections and sponsorships with all of the tech bros out in San Francisco. So right here, you're seeing a person trying to say, no, it's really not that bad. But if you start to connect the dots, you're going to realize it is actually kind of legitimately that bad. If you want to read this whole thing, I'm going to make sure that it is pinned below so you can see it. But what I want to bring to your attention is the final thing here. As an interim update, our current unaudited estimate for the month-to-date performance is down 67%, and a net year-to-date performance is plus 80%. So two numbers we're working with there, and let me start with the latter one, the year-to-date performance of plus 80%. Now, to be fair, if you watched the previous video, I did announce that, but yet there were a lot of comments of saying, oh my God, he's not that bad. He's up 80%. He's not effed over. What are you talking about? He's still doing way better than you. What's going on? Well, first of all, that is technically true, but as I'm about to explain, there's a lot of people invested in this fund who did not get exposure to that plus 80%. And also, from a higher level view, how is he doing that good if he just lost his entire hedge fund? So hang on, let's get into the details because, of course, that is where the devil lives. Shout out to Jeff Karen, both spelled incorrectly, but we're not going to hold that against you. The public book was fully novated to Citadel to satisfy the margin debt, leaving the LPs with zero in the public equities book. So what does this mean? Novated, SAT word of the day. It just means Citadel legally took control of all the positions. And as you're going to see, that means that they got rid of the public equities book where a lot of the gains were. But remember, they had the private book, which was mainly an investment in Anthropic, which is still a private company. The plus 80% comes from blending Anthropic stake at a 620% year-to-date, 25% of NAV, while the public book was minus 100% because it all got margin called. It all got liquidated. 75% of NAV equals the 80%. So the 80% gain had nothing to do with the public exposure, which means that some people really got screwed. Also, if you allocated on July 1st, you not only got a 100% hit on your investment, you almost certainly had no gain from privates, as in you didn't get exposure to that particular investment. And they liquidated a ton of stock with cap gains to meet margin calls in July, which also means you get a tax bill. So a loss greater than 100%. So depending on when you got involved with situational awareness, I understand that everyone's saying they're up 80%, but can you imagine losing all of your money and on top of that, more than all of your money because you're literally gonna have a tax bill? Absolutely brutal. So the question is, should we be pouring one out? Should we feel bad for the people who lost money? Well, let's take a look at who actually lost money. The investing heavyweights that backed situational awareness before it blew up, hedge funds behind aggressive AI bets, tapped into a roster of big name investors. Some warned the founder about risk of heavy borrowing. So who is it? Well, it's just kind of the who's who of Silicon Valley. It's on the screen now. I believe Stripe invested. Really, it's just, if you can think of major players in San Francisco, there's a good chance they had some sort of involvement in investing this. And why did it get out of hand? Why did so many people give this 20-year-old money when he was trading at 4-to-1 leverage? It's because sometimes people just don't learn. Whether we talk about long-term capital management, whether we talk about Archegos, whether we talk about FTX, every once in a while, every couple of years, some kid comes along who's thought to be quirky and weird and smarter than the rest of us, and it's an easy return. I mean, look at this 24-year-old whiz kid. Okay, so Jane Street got involved. Jane Street, one of the most shrewd players on the street, they got involved. They couldn't see through it. It just happens time and time again where someone out there pitches you this story that they're smarter than everyone else. They found an edge that is better than everyone else. Give me the money. They do it with too much leverage. They get blown out. And if only they played it with appropriate size, they probably would have been fine. So beyond that, you ask yourself, I mean, were there any signs? Well, as you're about to hear, yeah, I think there were signs that this kid was a little bit nutty.
That's the short summary of my post or my view on the project.
I just want to clarify that not only is that not AI generated, but that is a very normal way to respond when asked about your risk management process. So anyway, obviously we're diving into this concept of people blowing out and losing all their money, which means someone made a bunch of money. And as I've already alluded to, that is the real king of Wall Street, Ken Griffin of Citadel. Citadel's purchase of Situational's stock at discount is already paying off. Ken Griffin's firm gained 14% in its stock-focused hedge fund in July. And if you just focus on the week of situational awareness, he made a couple $2 billion in only a couple trading days. Right here. It's crazy. The stock-focused fund at Ken Griffin's Miami-based firm gained about 14% in July. A person familiar with its performance said Citadel's flagship Wellington Fund, a more diversified vehicle that includes wagers on and against shares alongside credit, commodity, macro, and quant positions, gained about 6% in July, while Citadel's tactical trading fund gained about 11%. So they made billions of dollars while other people lost billions of dollars. I believe if you really crunch the numbers on situational awareness, 225 million up to 45. By the time it all went to kaput, it fell all the way to 10. Ken properly swooped in, and like I said, in a couple days cleared billions. And if this trend keeps going, he's going to clear even more billions. So that is the most recent update. I see a lot of misinformation of people stepping in saying, oh, it wasn't that bad. Leopold, he was still up money. And I just want to make something very clear. You're falling into the same trap that we see time and time again. Someone being presented as a whiz kid. Everyone throws money at it. They don't do their due diligence. The person or the firm takes on too much leverage, they blow up, and it turns out the people who know how to properly handle risk time and time again are proven to be the real kings of or queens of Wall Street. So just a bit of an update there on the Leopold story. It's fascinating. A little bit of shame on TBPN, and I think it's just because of their connections to San Francisco and OpenAI, which is where Leopold's from. But just want to add some actual information on the whole story of what the hell is happening. Actually, it's kind of crazy. I still think it's one of the most fascinating stories, and I'm sure I would have felt the same if in real time we were there with long-term capital management where there was just people. It's the same pitch time and time again. We have a group of people smarter than everyone else. You should give us our money. You should give us your money, and we're going to make it more money. And the people who get in there earliest seemingly do fine, or maybe not at all. But the people who get in later definitely get absolutely murked, absolutely bodied. Okay, so just killing a little bit of time. We did just get some of the service numbers. What do you think, Piper? Piper's here with us today. We did just get a little higher than expected. S&P Global Services PMI just came out at 945. They expected 53.6, came in 54.6. But just so you know, in 6 minutes, we're going to be getting more reports on service prices and PMI. Hopefully they bring on our boy Rick Santilli for that so we can check that one out. Hopefully they bring on our boy Rick. All right, quick sanity check of where we are at on the day. The SPY very much could not get above 790, ran into that gamma node, took a hit. We did take out the opening print, basically a little bit of a fake out wick. I think this is going to end up putting in a lower high, and we're going to dip to the downside gap fill. That's my best guess, but of course we have to wait for this information to come out at 10 a.m. If it's really good, we might get that pop up to 800. So I'm kind of waiting a little bit for that. Looking at what's going on with the NQ. We did this yellow horizontal line is the pre-market high. We did take that out. That's at 990. I'm just going to take that off the screen because I think it's a little bit confusing, maybe throwing some people off. But right now, the momentum is bullish. It had a nice catch at the 50 and the 100 EMA right here. Caught itself again at the 50 EMA. If you took that, like I said, just be careful. Maybe get your stop to break even. I'm not your mom. I can't tell you what to do with your money, and I don't want to tell you what to do with your money. But anyway, you just need to be aware that there is a report coming out at 10 a.m. So I just want everyone to kind of be on their toes for that. So sideways, sideways, sideways. As of now, fake out breakdown. Let's see if it puts in a lower high. The Qs technically do have higher highs and higher lows. SpaceX trying to recover. Palantir was up, taking a bit of a hit. Meta is up 1.8%. What else do we have moving? Micron's up 2.5. NVIDIA's up 3.6. So Micron's looking good. Meta's looking good. Here, let's move all of these together so we can see where the good guys are. Meta, Micron, and NVIDIA all looking pretty solid. Hut's up 2%. I'm seeing a little bit more red than I am green, but that's where we're at today. I guess that's how we're running it today. All right, we have about 3 minutes. 3 minutes, 3 minutes, 3 minutes. So before I forget, don't forget to sign up for TPT. I myself, today I'm trading on TPT, 1 funded, 1 eval. I'm trading on 5 funded MFFs, 5 funded Lucids, 5 funded Tradeifys, and 5 funded FFN. So 5, 10, 15, 20. I'm trading on 21 funded accounts and 1 eval account. And as it comes to TPT, I do have more past evals. I just need more time to pass because you can only have 10 pros per 30 days. And unfortunately, your boy had a really, really rough month last month, and I blew out a couple too many accounts. A couple too many accounts, just to be completely honest. So that's where we're at there. Here's a look at the gamma map. Things are solidifying a little bit. Right now, the reasonable range is anywhere from 7.815 to the next interesting level is 6.5. That's where we initially bounce. And then if that doesn't hold, I'd be looking at 7.745. So just kind of watching these nodes and looking for some very large swings apparently through these negative gamma zones. The S&P 500 flow, we did get a flow alert and it was a recovery right off the flow alert. A little bit of a hit, but then that's catching itself. The MAG 7, nice spike until 940, bleeding off ever since then. The NASDAQ had a nice spike until about 950, taking a little bit of a hit since then. So no very evident clear trend yet. If you happen to trade today and you made money, seriously, massive congrats to you. That's awesome. But for me, things are just a little bit too choppy right now. Fake out breakdown there. Fake out breakdown a little bit. Let's zoom in. Maybe if we get our eyes really, really close, we can see something that no one else is seeing. Maybe. Oh, we're coming right back up to 90. Is this going for a breakout at 37? Matt, I don't trade like you, nor will have the time, but I enjoy listening to your content. Keep it up. Thank you. That's very nice, Alex. Well, however you choose to trade, and remember, there's many ways to engage with the market. I just hope you're crushing it. Whatever you do, there's a lot of strategies that can make you a lot of money in the market. The issue is finding the one that works for you, your lifestyle, your risk tolerance, your personality, your account size, and just sticking to it. Nothing I say beyond the fact that you have to respect your risk is gospel. Everything beyond that, there's always counter examples. There's always outliers. The only statement I make that is truly gospel in this game is you have to respect your risk. Other than that, there's a million ways to do this type of stuff. And you just have to find something that, once again, fits your account size, your personality, how much time you can be in front of the screens. Like, there's so many other variables that the only true piece of gospel in the game of trading is respect your risk. I say that all the time. I'm emphasizing that now because we just covered the Leopold story. But that's the only thing that no matter how you engage in the market, you have to care about. It doesn't matter anywhere from long-term investing to high-frequency trading to trend following to mean reversion to arbitrage. The only thing that is true perpetually across the market is respect your risk. Other than that, you got to dive into what works for you. I'm more than happy to share what works for me, but just because it works for me, and sometimes it doesn't work for me, to be completely honest, more than happy to share what I'm doing, but just because I'm doing it doesn't mean that it's the best. 3-touch trend lines are gospel. I I mean, I still didn't watch that class for the third time. I can't come up with another $6,000 to buy it. But like, I assume because it's a 3-touch trendline class from Tory Trades, that you have to buy it 3 times. I assume I've only purchased it twice, so I'm in the hole for $12,000. But I'm just waiting to see if I can. Do I need to buy it a third time? I think that's where the money's really at, is watching it for a third time. All right. Waiting for this. Obviously, the report was not that good because the market just took a hit there, which is kind of what I was worried about. A little bit less than expected. All right, bring on our boy Rick.
On the street. I'm Sarah Eisen with Carl Quintanilla and David Faber. We are live as always from Post 9 of the New York Stock Exchange. Stocks adding to major gains on the week. The Dow and the S&P 500 hitting record highs. We'll talk to one expert who says the market is now overpriced and it's getting harder to find opportunities. Plus, SpaceX under pressure after the company's first earnings report since going public. We'll talk to early SpaceX investor Peter Diamandis about the results. And Match Group CEO Spencer Raskoff with us as the dating company's stock pulls back on declining revenue for its Tinder app.
Got some ISMs today. Services, let's get to Rick Santelli. Hey, Rick.
Hi, Carl. Indeed. Now, our last look on S&P PMIs was a final read. This is a fresh July read for ISM on the service side. Headline coming in a bit light at 54.1. Light to expectations, but
180 there, 70, 70, 70, 70 there. All right, the bots hit on FFN and on TPT.
Area. And if we look at prices paid, going in the wrong direction, looking for 65, comes in at 70.3. Also, if you look at the rear view mirror, of course, it's 67.7. So this comps to May, 71.3. So it is a little lower than May, but it's definitely higher than our last look, unfortunately, on the new order front. Coming in stronger than expected and much stronger than the rear view mirror. 57.2, that would equate to 57.3 in May. They're all basically going back to May. And finally, on a very important week where ADP July read came in on the light side of 44,000, the employment side's coming in light as well. Sub 50. It's in contraction territory again. 47.4. We're looking for a number over 51. 47.4 would be the lightest. Going back to, wow, we're going back to, let's go August, almost a year, last year. And what's really interesting about this is that 1, 2, 3, we've only had 3 reads above 50 this year. So on the employment side, it's been a bit weak. We all know that the Fed did some easing because they thought the labor market was a bit weak earlier in the year, last year. Now, we're going to really see if that test holds true with some of the anecdotal evidence showing a little backtracking in the labor space. Interest rates are slightly elevated, mostly because oil isn't having the kind of drop we experienced the last couple of sessions. Sarah, back to you.
Sarah.
Okay, thank you, Rick. Rick Santelli. So the focus.
All right, we're getting rid of that. Just giving you guys the numbers. Obviously, the market not the most stoked because we just had a hard turn at 10 a.m. So potentially the classic 10 a.m. reversal. Wondering if this is enough. I mean, it's still technically a higher low. We have not cracked the intraday low on the SPY. We have not cracked the intraday low on the Qs. But I wonder if this is the setup to push us down to the downside gap fill. Maybe it is. Maybe it isn't. Time will tell. On that break at 10:01. That's when my bots caught it on TPT. I guess it played it a little bit larger. Could have been slippage, but it hit 180. And then on my FFNs, it hit 70, 70, 70, 70, 70, 70, 70, 70. So I'm done on the FFNs. I might have to do some micro plays later. I'm going to figure that one out. I'm not 100% sure. But on TPT, this one will keep trading. So I was doing a copy trade on that. So what I need to do is just disable FFN and then maybe switch it over to, maybe I need to switch it over to micros. I guess I'll worry about that later, he says inquisitively. He says not really sure what's going on. But anyway, we are coming up to VWAP, which might be breaking down. Let me go to the 1 minute here so you guys can better see that. So we are clearly below regular trading hours VWAP, volume weighted average price. That is the orange dash line. And then the white dash line is the session week VWAP. Remember, the session starts at 6 p.m. the night before. So we still haven't cracked the intraday low, but we are battling it out at VWAP. So this might be a higher low, but if this pops and it's a dead cat bounce, if it gets rejected at VWAP or the 50 EMAs or something like that, probably not the best situation. Still, once again, looking for this downside gap fill. Now, just because I'm looking for a downside gap fill, does not mean I'm actually bearish in the medium to long term. In fact, when you're at all-time highs, you should probably be bullish. Remember, new all-time highs generally beget new all-time highs. That's the pattern we see in the market. My reason for calling this downside gap fill out is just because it is a structural setup, and obviously the market not so stoked. But who knows? This might just, this higher low, we made a higher low on the SPY and the Q, so it might not be setting up. Obviously, I have not personally played for the downside gap fill yet. I'm just keeping it in the back of my mind because if price is popping, but options flow is not at all. At all, at all, at all. Oh, it's 30,000 is the point of control on. We just ran up to 30.
Order filled.
I was going to say if it falls much more, my bots are all going to trade. Well, one of these locked in. Hang on. What just happened? I'm a little confused here. So the pro locked in one of the winners and then had one loser. So it's down 300 now. Shit. All right. But then what about all these other accounts? Is that a little fake out? Am I about to get trounced here? Oh, do I want to... Is it going to get rejected at 30 or is it going to pop? This is not so good for me. I think I'm trading on... I did update the ATM yesterday, and I think I might get a little screwed on that one. Not good. I'm not feeling good about this. I need this to get rejected like now. It was a viable entry, like the setup was there, but based on the risk, I should have readjusted to go down to one contract instead of two because I
Order filled.
didn't want that to happen. Did not want that to happen. Okay, I definitely... Ticks. What is this? I'm on the wrong strategy, the wrong ATM. All right, you know what we're going to do is, for now, make sure... Okay, save that as template. I want to just make sure I get onto the right strategy here. Well, that's a huge bummer. That was way... It should have been sized down to 1. That was way too much potential risk. It was trying to catch this breakdown, which is a legitimate entry. I don't mind that. The issue is the risk that was taken. It should have been sized down. And it was because instead of being on main ATM strategy, it was on X ticks, which I did not catch in time, unfortunately for me. But the real question, I don't have much room to deal with here. Do I need to drop it to... I really don't have much room. I have like 5 points. That's dangerous. Fuck. I put myself into a bad situation. Better way to do it would have been 5 micros, 5 micros. So it was 1 mini in total. That would have been a much better way to do it. Scale out 5, scale out 5. Would have been a far better way to do it. Patience. I like the trade. I like this entry, this failure. It comes back up to the 50, pierces the 100. I really don't mind the trade. What I mind is that I was on the wrong strategy with it. what I very much mind is that I was on the wrong strategy with it. So now I basically need to, what would be the best way to recover from this? Because I don't have much leeway. I guess I just have to get in and do a break-even trade is probably the only way. Is like take some sort of breakout, breakdown, quickly go break even, and then pray. Yeah. Is it going to get... All right. This is all either going to work or it's not. We have a succession of lower highs and higher lows. Technically, it's consolidation. Lower highs, higher lows, at least on this time frame. But every time it looks like it's about to crack, which is sad because I was almost back to break even there, which, once again, coming to the size, and if I had one contract, it would have been perfectly fine. Why I was willing to take that, just to like clarify, is because I see weakness in the Nasdaq flow. I see weakness in the Mag 7. It is picking up a little bit, but the SPY was showing weakness as well. And now I just don't properly have room to play it. All right, what are we doing? And also, more importantly, do I need to cross trade this? I probably should. Or do I just go for it? I mean, that's a lot of luck I need on one trade. Oh, I'm so frustrated I traded two with this range. I bet there is a way. I bet there is a way in the code to auto change the size, and then I don't have to do the math on the ATMs myself. I bet there is a way to do that in NinjaTrader. In fact, I'm like confident there's a way to do it. I bet. All right, if this pukes here, I'm going to try to take advantage of it and then just quickly do a break-even trade. We'll see if it works. It's crazy enough, it might just work. Or it could get completely destroyed. You never know. One or the other. One or the other. Okay, yeah, I have the 10. Yeah, I think I just have too many different ATMs going. Obviously, I'm currently in no position. I'm just waiting to see how this actually plays out. 1 minute saving itself, 5 minute, 10 minute, 30 minute bullish. 1 minute. What's this doing? A little fake out, fake out, fake out. We'll see. We'll see. Is this going to hold? Seriously? Look at that consolidation. Fake out, breakout, fake out, breakdown, comes up. This is where I try to short right here. I was like, okay, cool. We have a new trend. This is the point that I went short right there. I don't mind that entry. Honestly, I'd probably take that entry 9 out of 10 times. I really would. Lower highs, it pops up, starts to fail. I go short in here, got wicked into it, locked in one on one of the accounts, but I had the wrong ATM, so it didn't get locked in across the board. And then it popped, and then this is, they're alive, but they're on 1 HP, if you will. They are on 1 HP. Look at that, dude. Buyers are stepping in right here perfectly. They're and then sellers stepped in even more aggressively. I need to think of the best way to do this. I need to think of the best way to do this. To try to save these accounts. Okay, I'm gonna cross trade it to MNQ to try to give myself a fighting chance here. To try, and I have it set up properly. Okay, we have it set up. All right. So I'm going to trade on the lead. Dude, what is that? What is happening right now? That's vicious. I mean, 325 to 8. That's a 40-point just craziness. Anyway, because it's crazy, I'm leading with the sim account on NQ, and then I'm cross trading it 1 NQ to 2 MNQ and seeing if I could catch a bigger trend to try to save these. I feel like it's my only reasonable shot. I'll try to aggressively go to break even. But once again, what I'm attempting to do is save these by cross trading to MNQ. So basically trading a fifth of the size. Fifth, 5 points. So I have 25. And even that is not much with these ranges. It's not much. We'll see. We'll see what's going on with this bottom here. How's the SPY like? Range bound. All right. We fake out breakdown. Really, it's just a higher low. We bounce back up ever since 1007. We are range bound. We just have to have the patience to see which way this breaks. NVIDIA is nicely climbing. Meta, not so much. Micron is decently climbing. Dude, what is happening here? All right. I'm trying to be smart. I'm trying to save these accounts. I can't believe I made that mistake. It should have been one contract. The loss should have been 800, which is not ideal, but it's manageable. And instead, I'm at double that. And it got locked in on the other one. That's so infuriating. But hey, sometimes shit happens. I cannot believe how choppy and ugly this is. It's choppy and ugly till it's not. That's the thing, is we never know when the periods are going to switch from expansion to consolidation. It just goes back and forth. Expansion, consolidation, expansion, consolidation. And even that, the expansion consolidation, you're going to see that differently based on the time frame you're on. Like, you could see wild stuff in the 1 minute that might look like nothing in the 10 minute. The 10 minute might look crazy, and then on the 1 minute, you might be like, we're literally going nowhere. So even that has a little bit of a time frame aspect to it. Even that. But let's just wait. Let's see. We can see SPX has really not cracked 90. We are seeing these higher lows. I'm curious if that's going to break or if we're going to break out. So kind of watching this trend line that we're at here.
Order filled. Order filled. Order filled.
What the fuck?
Order filled.
What happened? Why did they not get into a position? But then the MFFs got into a position and I was able to help myself a little bit, but these other ones didn't, which sucks because I caught the trade. What the fuck? Why did I not get in? Is it just something? I guess it just missed it. I did it on MNQ. So I'm a little confused, but then even the orders, did I set this up? I mean, here's my trade copier. So I have SIM, but then I'm crossing it to MNQ and I'm doing it at a ratio of 2. Well, this one's technically off. Not that that traded anyway. So 1 NQ should be trading 2 MNQ ratio. Exactly. Yeah. So I'm ratioing it to 2 MNQ. I don't know why some got in and some didn't. I guess there just wasn't liquidity there or something. Something like that, maybe. I don't know. They didn't take a wrong trade. They just didn't trade, which is weird because 5 of the 15 traded. The MFFs, I was able to just pop up by $700 off that. Hang on. Let's properties. Nope. I guess they're just I guess it was a liquidity issue, and I have it set pretty stringently to like getting a fill quickly or not tracking the trade at all, which is, I believe, what happened. So there was enough liquidity that the 5 MFFs got a fill, and actually one of the Lucids. This is so weird. So one of the Lucids got a fill, 5 of the MFFs. So out of the 15, 6 of them got a fill. So it had to be a liquidity thing going on with, I suppose, a liquidity thing going on with. Oh, that's frustrating with MNQ because MNQ is a less liquid product. But what's frustrating about it is I would have never got knocked out for break even. I would have had this trade and I would have still been riding it, like probably actually taking away 2/3 of this loss, which would have been so incredibly helpful. You don't know. I was waiting for that trade. And of course, there's going to be like an aspect of luck. But the fact that the luck played out for me and I just couldn't, maybe instead of a pending order, maybe I should have just done. Maybe I should have done a market order because then that would have forced them to all get in if I was really interested in doing this. I guess that would have been one way to avoid it, but it kind of feels like crying. Oh, dude, I would have caught this whole thing. I think I would have already been basically back. Fuck, dude. That's frustrating. Okay, whatever. Can't cry over it. Still need to fight my way up. Still, so out of the 15, 6 of them, I was able to do something. But now we're playing a dangerous game where I need to be patient for the next best setup and try to not mess that one up. And I have a sneaky suspicion that that next best setup will look a little... Okay, 7726. All right, got to watch these levels. Okay, we're at the 10-minute 50 EMA. That's kind of an interesting level to be at right here. The 5 minutes potentially cracking, the 10 minutes testing at 920. And we also have some VWAP readings at, once again, 920. That's the 10-minute 50 EMA. Market makers are stream sniping you. Yeah, I wish I could blame it on that, but that's not it. It's just because how I have the trade copier set up and liquidity things, it was able to get a fill on 6, but who knows? For all I know, maybe I would have kept holding and like maybe this is going to knock it out for break even. Like you just don't know. I don't know. I do know that because it got all disconnected and weird, I closed out. You can see instead of losing, I mean, I made $700 off that. And that was just off of 2 MNQ. I believe it was off of 2MMQ. If my trade copier is working properly, that's what it was off of. Classic revenge trading go long for the bounce. No, I'm a little hesitant because I still don't think we've hit the downside gap fill. We haven't. We have not hit the downside gap fill. So I'm still in the back of my mind. I get it. We could easily go 9,800. That's all totally possible. Buyers are stepping in at VWAP. Buyers are stepping in at this higher low. But I guess I didn't have the balls to do this because of I'm still wondering if SPX wants to revisit 7758. I'm still curious if that's going to be happening. Rejection at this VWAP. Looks like it. Looks like it. 60. All right. How do I do this? We're just bouncing right now. We overshot one VWAP, bounce up to the other. We're just VWAP, ping-ponging. RTH VWAP, session VWAP, low, high, overshot, undershot. Now it's a game of which way will it break? I have had many issues with Replicanto order execution, went to market orders, and so far so good. Okay, so you switched it to market orders. Okay, I'll give it a whirl on this next one. I don't have much to lose, unfortunately. 40 points. So these have 250, 250. Is this just gonna, do I want to take this breakdown trade? Is it gonna break down? All right, I think I have it all properly set up if I like the setup. $9.31. Are these bots still on? They're not. They got disabled. And all that craziness. And they would have taken that trade too. That sucks. Okay, so I see why you're doing the market order because of liquidity issues on MNQ. What's this low? 32. Slightly higher. 35 to 58. I think I can risk that. All right. I'm going to try to go to break even. I need to catch some sort of special dag. I'm going to try to go to break even as quickly as possible if I get the fill.
Order filled.
I think I'm in on all of them. Yes, I am. All right, we're playing quite a bit smaller to give myself a shot. We'll see if it's smart or not. We're playing quite a bit smaller to see if I could save them. That's not really my target. I'm just kind of throwing it up there. Okay. Did I catch something? I'm just trying to get myself out of this hole. Like I said, this one's going to be up quite a bit more just because I don't have much leeway. And as good as it looks, I would have actually been blown out if I played the normal size. So I can't complain about it. Just trying to give myself a little bit more breathing room. So basically, whatever you see on the screen, the other ones are at a fifth of the size. All right, let's go to free trade. It's a free trade. Let's see if I can get lucky and actually catch something here. All right, so I need to set an alert on SPX 65. It's a gamma level. And then we're going to be looking at the downside gap fill at 7758. Obviously, very important to me if these alerts ever turn on. If I look at the 10-minute, what is the overnight low? 776. So I could look at 780. 780 is an interesting level to me. I need it to crack 850. Okay, so if this hits, I'll be at a fifth of this. So I'll make $600 back. I know that this looks good and you're thinking to yourself, Matt, why didn't you just trade this with the normal size? Because if I did that, you could see right here, this little pop up, I would have lost all my accounts anyway. So as good as this number looks, I would not be at this point. So I just want to clarify, maybe instead of 2, because I am cross trading it from 1 NQ to 2 MNQ, which is why it's a fifth of the size. I could have gone to a third, I guess. But right here, if I traded it straight up 1 for 1, I would have lost all the accounts and then I would have missed out on this. So quickly put the stop to break even. I'm just trying to give myself a little bit more breathing room. So whatever numbers you see on the screen, just multiply that by a fifth, multiply it by 0.2. So just trying to get myself a little bit out of the hole because I made a really stupid mistake on my ATM this morning. A really, really stupid mistake. Okay, so I'm at 780. Why I'm at 780 is it is the, you know what I need to do is we need to double pane this so I can watch NQ as well. The overnight low, okay, we have, let's go to the 10-minute here just so I could see these levels. 797 and then 776. Buyers commonly step in there. Maybe I'll catch a flush, maybe I won't. I need it to stay below 920. My short is at 930. Fuck. Is it coming back up? Do I just go free trade? How do I want to do this? I'm short just below V. I mean, this thing could so easily tag VWAP and then puke. Like, do I just want to give it full range? I don't know what I want to do with it. Like, because I'm so on the ropes. Like, if I had reasonable buffer and I wasn't playing for my heels, I would just leave this at break even and see if it goes. But for this is kind of like my shot. And it's right. I mean, I already missed that first one because of a trade mess up. I'm just wondering if I like want to move this. I mean, obviously that would blow it out if it goes all the way up there. Can it just turn? If we could take out 68. Here's your 5-minute. Let me clean this up a little bit. Make it. Okay, we still have not hit the downside gap fill on SPX. The downside gap fill is 7758. So I have this distance to potentially go. Obviously, the closing value is 7736. But then if you look at NQ, what was the high on NQ? All right, we took that out. the overnight low is 776, which is kind of why I arbitrarily had a fill at 780, which I think I should take that if I'm gifted with that opportunity, because it might roughly be in the range of the downside gap fill. And then if I can make $600, okay, now like that's some distance to maybe play with. Instead of only having $200 a buffer, then I would have 800, and trading at this size, it makes it a little bit more reasonable. Makes it a little bit more reasonable. But our buyer's stepping in. Is it capturing? It is capturing. Not shit. We have a higher low. It might be coming. What's the best way to do it? When in doubt, stop to break even. I just want to think about it. I guess I kind of have to keep the break even because the MFFs are somewhat saved. Like I already made the 600 or whatever on it. So those ones, maybe I shouldn't be focusing on the worst ones. Maybe I should be focusing on the ones that like actually have a shot to get out of here, because the MFFs and one of the Lucids did catch a trade. So because of that, the stop should say break even. I don't want to give back double that. Okay, maybe do I go to 14? So where it seems to have been rejected is potentially the 10-minute 50 EMA right here, which is around 920 right there. See the top of this wick? It's the 10-minute 50 EMA. This might be setting up for a little push. All right, I'll set the alert. I mean, delta flow's in my favor. S&P 500 delta flow's getting hit. Mag 7's getting hit. NASDAQ is getting hit. I say that and we pop up to 900 pretty aggressively. All right, whatever. My stop's in at break even. So it can't get worse. The situation's bad, but it can't get worse, which is solid. We have 7745. So if we crack 65, I'm looking for 45. So if we crack 6.5, I'm looking for 4.5. And in between, I wonder, should I pull this down even more just in case and then maybe start just trailing it aggressively? Because what if this is my lucky trade? And what if instead of bouncing at 5.8, what if it does go to 4.536 or something like that? Like maybe I should just... Here, for now, we'll just anchor it to 700. I'm not saying I'm going to do that. I just want to think about this because I can think a little bit more clearly. The stop's at break even. I could actually move it down a little bit to 15. Maybe I'll move it to 21. Like maybe, do I just want to trail it? I mean, that's a high. What's this high? This high is 14. Like I would hate, in the situation I'm in, I would hate to give back an actual runner when the actual runner might be what saves me. Whatever you do, don't give it all back. Well, I just don't know. Like I'm trying to protect myself, but I see no other point to reasonably put my stop at than this high. I'm in at 30. I don't know where else I would put my safety spot besides 15 at this point, especially based on these ranges. Like if we start to crack 800, I mean, I'm just going off what the chart is giving me right now. And I just don't see a different spot. I mean, shoulder, head, shoulder. There's an argument for 903, but 903 is not even that different from 915. And the way we're moving 20, 30 points like it's nothing. This easily could get hit 900 and then vomit again. So I'm not going to lose money. I'm not going further into the hole. Add. I guess if I had balls, I would do that. But I kind of don't want to, because then I'm trying to figure out, do I want to add and also the risk management of the add wall? But that might be smart because now I already gave myself extra buffer. So if I add to it and it keeps going, it's kind of riskless. Lots of decisions to be made that I wouldn't have to make if I didn't accidentally trade double the size I should have this morning. Oh.
Order filled.
Bot took a trade and just got filled, got back green on the day. That's nice. Got lucky, it looks like. All right. I mean, if this gets tagged, it's not even helping me that much. It's an extra $60. But I can't focus on that. That's a bad mentality, because what I should focus on these are these MFFs, which really are not in that bad a shape. They're down 700, which is less than the original loss I should have taken this morning anyway. But the original loss was like 800. So I'm actually, it's as if I took that one loss at the proper size, and now I like have a little bit of a mood. Like, I can't focus on, oh, like I gotta save these in one trade. What I should be focusing on are the ones that I like might actually be able to save on this. What's 1,750 times 5? I would need this to drop. Mine is 29931. I need it to go to 500 for this to break even, for the minis to break even, which is possible. We were there yesterday, but it seems unlikely. It's just, if I do trend following, the question is when to get out of said trend. Do I cut it at the halfway mark, which would be an overshoot? So we cracked 65. Actually, we're fighting at 65, which is this positive gamma node. And it's definitely a bit of a fight. But we're at 65. The next one is 45. And in between that on SPX is the downside gap fill. I think I'm just lady luck here, folks. Are we going to 800? Are we going to 775? Are we going to 758 on SPX? Are we going to 45? Or is it my... Okay. Here's my real question right now. Is if I'm lucky enough to ride this down to the downside gap fill, SPX goes to 758. We don't somehow rip above 900. We stay below that, and we're in the realm of 800. There's probably going to be some form of a bounce. So the question is, do I like just try to hold on for dear life and pray that that bounce fails and we plummet? Or what's the real thing is, how do you know if the real bounce is a real bounce? Unfortunately, with real bounces and fake bounces, you don't know till after. That's the difficulty of trading, is probably we're going to see some life at 800. We're probably going to see some life at 58. Is it possible that we just vomit to the next level? Is it possible that, yes, it's possible, but we're not here for what's theoretically possible. We're here for like reasonable odds. And if I'm fortunate enough that we touch 5.8, if I'm fortunate enough that we touch 800, the question is at what point on the bounce do I admit I'm wrong versus no, this might be a dead cat bounce? That's what's going through my mind right now. Because if I could somehow catch a vomit to sub 700, okay, then the accounts, they're red on the day, but like they look way, way better. And to clarify, like, just so everyone knows, I'm not being so degenerate. The stops, it's in the money. I'm not losing money on this. The question is just like, how much out of the hole can I dig myself here? That's the real question. I'm ready for a Trump tweet. If Trump tweets, obviously it's just going to knock me out and I'm going to get screwed. Oh, I need to see some fresh lows. I need to see us take out 44. I need to see us take out 30. We're building up a succession of higher highs and higher lows in the shortest time frame. A little fake out there, pops higher. If it can just chill below 850, I'll be a bit calmer. I would love for it to chill below 800. I would love for that to happen. Little range bound now. You can see that a bit better here on the 500. Once again, 700 isn't my actual target. If you're just tuning in right now and you're like, yo, Matt's swinging for 700, I'm more so just trying to follow the trend. It's only up there because it's an OCO, and order cancels order. I just moved it down to get it out of my way. Really what I care about is the stop and proper stop placement. I'm short at 31 and my
Order
stop's at...
filled.
Oh, the bot's in a trade. What's the bot doing? The bot took that breakdown short at 38 and it's targeting 33. And apparently it's given it some not enough. Okay. Interesting vibes. Actually got caught up in that wick, the little fake out breakdown. 39. It got as low as 38.25. So it went 3 ticks below. That sucks. That really sucks. Just got ticked in a little fake out breakdown. Little fake out breakdown on that one, team. Jesus, that sucks. But I need to focus on this. This is my real focus. Bot took that loss. Hopefully, it's just another fake out to the upside. What are we doing? Is this real or is it fake? Do I just want it? I mean, it could so easily tag VWAP. Like if I go free trade on it, I'm not risking money on this. The question is, do I use 15? Do I use 30? Because VWAP is right there. It could so easily tag it and bomb it. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Which way are we going? Which way are we going? Showing a little bit of life, a little pop. Is it going to hold? I guess that's the multi-$1,000 question for me is, will this hold? Will this hold? It's shown a little bit of life. How's the options flow looking? So we're back above on SPX, at least we're back above the positive gamma at 65. NQ, it's still in the red on the 1, the 3, the 5, even the 10 now. A recovery would be above 920. VWAP is 930. 15's even potentially breaking down. 30-minute has distance to go down to 760. This is an interesting region to me. The 50 points below 800, 29,800 to 850. A lot going on there. But then again, maybe I'm seeing things that simply do not exist. Or maybe they do. Nasdaq catching a little bit of a bid, dipped pretty hard at 1041. A little bit of life. Mag 7, same thing, a little bit of a bottom at 1040. Overall trending down, but from 1040 to now, a little bit of an uptrend. Same thing on the SPY. So stuff was finding a bottom at 1040. Little bit of life, but the question is this the dead cat? Is it just like, how much is it? I'm not seeing people buy calls. I'm seeing people sell puts. Whoever decided to fade the move seems to be locking in a little bit of their profits. I'm confused as to why this level doesn't make the most sense to me. We didn't get the downside gap fill or anything like that. I'm confused why they're locking in their puts, but regardless of why they're doing it, it's more of the fact that they are doing it right here. These blue lines going up 1041 till now. Puts are being sold. Why are they doing that? All right. Am I about to get knocked out on this one? Oh, how do I want to do it? How do I want to do it? Is it really going to take out 914 is the question. Maybe not. Maybe I'm going to get lucky. I'd feel a bit better if we take out 840, 850. What is this level? 66.5 is seemingly the shelf. Ah, that distorts it too much.
Order filled.
Bot took a short.
Order filled.
Got knocked way too quick. But that's not really my focus at the moment. My focus is saving these. Okay, probably should put it to here. Got rejected at the IB low. Got rejected at the IB low. Maybe getting a little lucky. It did put in a lower high. I didn't have to sweat it out. It didn't touch VWAP. The risk of it touching VWAP was very, very real. Just playing from my heels. And, dude, if it can somehow get to 700, I mean, it's not going to be perfect, but it would take out quite a dent in my loss to the point where maybe I should have been trading MNQ this whole time anyway. All right, let's go back to the handy dandy. Like I said, it was puts getting locked in. Yeah, Delta Flow resumed its trip back down. Mag 7 back down. NASDAQ back down. We're going for the downside gap fill as we speak, right about here. All right, so we're about to hit the downside gap fill, which is this green line. Let me go to the 5 minutes so you can see it a bit better. The downside gap fill on SPX is 7758. I'm a little concerned because, let me load this up. I'm a little concerned. So we caught ourselves at a positive gamma node. We popped up. It seemingly failed. There were people locking in some of their profits there, at least on the S&P 500. We saw the puts going up. We're coming in close to this downside gap fill. Buyers could easily step in there because simultaneously, as we're coming up to this key technical level that you, me, and everyone's paying attention to, we're also roughly at 800, which might be another buy level. And just below 800 on NQ is 776, 29,776.5. Why that is important is because it's the overnight low, which is another strong signal to actually buy. Like I have strategies that buy at that level, which if it's a strong bull signal, the question is, should I get the oh, whoa. Okay, we cracked it. Shit, how do I want to handle it? All right, we got to update risk, calm, cool, collected. We are chipping away. We are chipping away. Where can I put my risk to not give all this back? Where in the world can I put my risk? I mean, it could be aggressive at like 843. We haven't hit 76 yet. The blue horizontal line is that overnight low. Can I dig myself out of this hole? Can I dig myself out of said hole? Okay, here's the bounce at 800. And this is before when I was talking out loud, which I guess is this entire show. This is what I was wondering is like, at what point on the bounce of 800 is it still a dead cat versus no, you're like legit wrong and you got to get out? cash here and look for another entry. I'd probably do that if I wasn't in the situation I was, because getting into another position is tough. Every time I enter one is because I just don't have much leeway. So like when I have one that the stop is in the money, I'm kind of biased towards holding on to it because I know in the worst case situation, I'm still going up a little bit. So if I wasn't in the silly position I am right now, I would have scaled out either all or some at 800 without a doubt. But because of the unique bad situation I'm in, I kind of need to just like see if I could get even more lucky with it. I'm definitely going for a bit more luck than skill on this one. A bit, but right. It never hit 76. Okay, let's add an alert there. We did get the downside gap fill. Congrats to everyone who played that. $57. Okay, so we'll call it 60. So like I said, between 800 and 760 gets interesting. Between where this one is and really this one. This is an area of support. And yeah, at areas of support, you can bounce. You should look at it to see if there is a bounce, but support remains support until it doesn't. And now I'm looking at 45. I'm looking at 36. NASDAQ, I see it taking a hit. MAG 7, I see it taking a hit. S&P 500 is going flat at this level. So the active trading did pivot a little. Son of a bitch. Oh, brother. Is it going to crack 800? I would have been, I am still kind of really tempted to take profits at that overnight low at 776, which it never hit. So I can't kick myself for that. We never touched 776. But we're showing a little bit of life over here. And we're now showing a lot of life. This is, yeah, this is where I suppose the art meets the science. And yeah, there's one thing to follow the strategy and do what you need to do. But then there's this exact situation where decent entry and I'm just trying to get lucky with a bigger continuation. It really didn't hit the major level, like I said, 776, but we did hit the downside gap on SPX. We did hit the 5-minute 50 EMA. We're just trying to see how it goes, man. Trying to see if there is a sell-off. I mean, we hit the top of the zone, which is why I said I probably would have liked to scale out there. If I was not in the position I was, I probably would have scaled out some at that level and then some at the bottom level. And if I have any left over, I would try to ride it. But I'm in a position where I can't really exit unless it's like really worthwhile, just because of how the unrealized drawdown stuff is computed. All right, if it can just be another lower high, I might just crack it. Let's just start to take out some of these recent lows. Delta flow is going my way, which is nice. S&P 500, I'm watching that as closely as I can. MAG 7, a little fresh low, a little bounce off of it though. NASDAQ, same thing. So overall, I'm trading on the right side of flow. And I probably would have made a killing on this had I, on my initial position, just not had my head so far up my own ass. But sometimes that's how it be. NVIDIA taking a bit of a hit. Micron's actually showing a bit of life. All right, let's go to the 5-minute on all these. It'll just make it easier to see what in the world's happening. So the SPY's fighting it out at the high from yesterday. Could very reasonably be the bottom. I'm looking for it to not be the bottom. Do I have good reason for it? Not really. The Qs are red. NASDAQ is showing a little bit of life. MAG 7 showing a little bit of life. The S&P 500 showing a little bit of life. I really need this to like crack now. 5-minute went red, 10-minute went red, 15 minutes down there, 30-minute is still green. Shit. This is exactly what I didn't want to happen. The question of have to question, is this the dead cat that fails? Or is it a legit turnaround? And you just don't know. I'm saying it out loud, but you honestly do not know until it's over. I mean, the momentum is still down, but in hindsight, 800 might have been the low. Might have been the low. The game of trading is incredibly easy in hindsight. Well, while we're getting close, I'll go break even. But it's when you're doing it in real time that the difficulty level goes from comically easy to insanely difficult. We technically still have a succession of lower highs and lower lows. We do have that. I'm not fighting even the 1 minute trade. Obviously, the 100 tick and the 500 tick move quickly, so that changes a lot. But right now, on the 1 minute, we do have lower highs. We do have lower lows. And as much as this vomited from 1051 to 1054, we were up, vomit. That might happen again, or it might just keep grinding up. You just don't know. All I could do is kind of protect myself and hope for the best here. Hopefully we crack 787, and really I need a crack of 760. Why I'm saying a crack of 760? 760 is a 30-minute 50 EMA, which is a common reaction level. That's actually like 62, 61 right now. So paying close attention to that. The 1 minute, as you can see, momentum-wise, in the shortest time frame that I kind of pay attention to, it's still down. ES, it's still down. But flow is picking up a bit. Not so good for me. Not so good for me. Oh. Just gotta wait. I don't know what to do beyond it. Could be a dead cat bounce right here. I guess it becomes less of a dead cat if we legitimately take out 77484. If we take out 72445, like then probably screwed. But in the meantime, this could so easily fall over. And anyone in chat predicting the fall or the pop, you're just guessing. There's no way to be hyper confident in this particular read. No way. You would have been giga up if it weren't for this morning. Yeah. Woulda, coulda, shoulda. That's the story of trading. So I can't focus on that or it'll probably just piss me off. I mean, I would have been back for sure because I would have lost 800. It was a loss. I'm not saying that was a winning trade. I'm just saying it was double the loss than it should have been. I should have lost 800 on it, risking 40 points. And instead, it was risking 40, but it was 2 contracts. So it was really 80. So I accidentally traded double the size I should have. So that just, like, it sucked. But I am silver lining here. I'm red on the day. Everyone knows I'm red on the day. Silver lining here is I'm happy I kept enough composure and instead of being super degenerate and trading NQ, that first trade I got into that I'm in now, that like is potentially putting me somewhat more green. When I got into it, it would have actually blown out if I traded NQ. So I'm really happy I sized down to MNQ. Granted, maybe I sized down too much. I'm trading 2 MNQ. That's the cross trade right now. I probably could have been up to somewhere between 3 and 5, but maybe I overreacted and tried to be a little bit more conservative, but you never know. Maybe that bounce right there could have been bigger, and maybe 2 was actually perfect for the current ATR. So when things go right, you always kick yourself and say, why didn't I play bigger? And then when things go wrong, you always kick yourself and say, why did I play so big? So like coming off of a stupid fat finger mistake when I was literally I was on this ATM rather than this one, that was the mistake. I literally just had the wrong order pending there. It traded double the contracts. I took the unit size loss and it was double than what it should have been. So that sucks. But whatever, that's life. Can't cry about it now. I got it set up. I'm trying to manage this trade properly. The stop is at break even. I'm looking at this high at 881. I'm looking at this high at 906. I'm looking at this high at 913 as all potential points. But then VWAP is here at 922. So it feels like this 914, 915 risk is the weakest. It feels like I either need to let it go and leave it here at basically break even because then I'm protected by these three highs and VWAP, or hyper aggressive and use the closest one because then that guarantees 50 points, which is really 100 points on MNQ. So that's what, 10. So it gets me out of the hole a little bit. It feels like that's the weakest one because at 914, just the odds of touching VWAP are so high. So at that point, you might as well just use the break-even stop. Other than that, why mid-range? Either be super aggressive or be the most lax you can be, is, I suppose, how I'm thinking about it. Any consideration of locking in one NQ? I would, but the issue is how I have up the copier is I'm only trading a NQ right now. So if I close this, it would close the full position. I think I would have to reset up the copier on MNQ to trade it. I was thinking about that, of trying to scale out one at 776 and then riding the other. I was legitimately thinking about that. But the way my copier is, like, you could see it. What I should have done was, instead of the ratio of 2-to-1, I should have just kept it exact and traded 2 NQ on the sim account. Would have, yeah, that was on me. It was just literally how I set up the copier, which I guess in the meantime, while we're stalling out, I could reset it up. Yeah. So that's more of just a copier setup issue than anything else. Damn, that's a higher low. We've been nicely making lower highs. Here's the high, here's the high, here's the high, here's the high. We're seemingly about to go test this high at 81, and that is clearly a higher low, 826 compared to 788. Is the trend changing? And it's right at this red to green move. Right at the red to green move, which is a tough read because we could so easily get rejected there, or it could break out. It's also the 1 minute 50 EMA. So we're kind of coming up to a key level. It's a recent high. It's the red to green move on the NASDAQ, and it's the 1 minute 50 EMA. Lots can go down. I'm hoping it's a fake out. I'm hoping there's a clear rejection there and people keep the Qs red. For my trade, hey, if you're bullish, I'm sorry, I'm rooting against you. I do care more about my account, though, than your account. I do care more about my account. Come on, just fail. If it can take out this shelf at 825, I'll be feeling better about my life. Take out this shelf right here. 825, crack 800, go to 776, and be one of those rare times that we don't bounce over the overnight low and just puke. But a boy can dream. It's not looking so good. We are below both VWAPs, but we're just so evidently trending up. SPY is stuck to the high from yesterday as of now, while the Qs are just below the closing value. NASDAQ is going flat, maybe a little bit of an uptick in the past couple minutes. Mag 7 is trending down. S&P 500 sold off, now kind of going flat. I would love for this to turn over. Love for this to turn over. But it's fighting. It's not fighting. It's just going sideways for the past like 5 minutes, 10 minutes. We're stuck in between 6.5 and 4.5. A little bit of negative gamma here. We might just be ping-ponging 4.5 to 6.5. Potential breakout. Fuck, I need this to fail like now. I need it below 900. It is battling at that high. Could be a fake out. So what is this breakout bar? I'm on the 1 minute. So depending on the time frame you're on, the breakout bar might be different. But for me, on the 1 minute chart, I'm looking at this tag of the recent high. I'm looking at it at the 50 EMA, and I'm looking to see if it can come back below. We'll call it, what's this low? This low is 47.75. 47.75. All right. I need it to get rejected. And if it does get rejected, what the fuck? Okay. I don't know what that's about. Okay. One of them is disconnected because it was stupid, but this one's still on. So this one is setting up for a trade, I could tell you. The one that's up 2.6K. That one's a bit more conservative. Just working on a couple different strategies in the background. I believe on a rejection in here, it should theoretically go short. It just depends. It should go short. Yeah, I believe will go short if this breaks down below 47, this recent swing low. Unless that's not enough of a dip, it might be considering 26 the swing low. And also none of that matters if we keep going up, obviously. Shit. Come on. Come back down. Come back down there. Look at that climb. That climb against me. From 828 to 891. Oh, this is exact. Come on, fail fast. Yeah, a little fake out pop. Now fail. Little wick to the upside. Keep coming down. Let's take out 847. Don't go bullish. I'm not going to switch bullish. Most of my momentum readings are bearish. So I'm, as of now, looking for bearish setups. I'm not tempted. Not the most tempted. I mean, right. Okay. What's this shelf? 2.5. Yeah, if we could take out this shelf right here, 825 leads to a test of 800, leads to a test of the overnight low at 776. That's a big if. I'm just trying to dream here. I'm not saying it's likely, but that's what even this fake out, breakout, but now that smack is being bought. Someone's trying to get this going. Look at that. Wick, got smacked, looks bearish, might end up being a bear trap if it pops right again. Someone stepped right in to save it. You could probably see that better. Let me switch over to this. And yeah, there's the book map above me. You can see the craziness pop up, sell off. Someone stepped in. Someone's fighting. Someone is fighting on it. What is this? What is the 10-minute? 7. This is the 10-minute low. Come on, I'm watching this. We went green to red, tested, failed, retest. I'm looking for that lower high failure. What do we have? SpaceX down 8%, climbing up a little bit. AMD, it was down worse. Trying to climb. NVIDIA's having a decent day. Come on. Can I ride this back? I mean, obviously I'd be very stoked to go green on the day, but even cutting my loss in half would make me happy. But 600, I mean, if I'm willing to trade with small size, 600, if I'm willing to trade 2 MQ, that's really like 3K. 29,800. That would be my next stop. But really, just to clarify, what I'm looking for is we have 2 interesting levels overnight. We have this low at 4:40 in the morning. We did pierce that, but we didn't pierce the 6 a.m. market open. But what I can point out is we're hanging out at the 10-minute 100 EMA right now. There's the 50 that we snapped, but we're hanging out at the 100. If we get going, I'm looking at 776. I'd expect some sort of bounce there because once again, I've done a lot of data mining on it. Going long at the overnight low is a bullish, positive EV strategy. And as a person with a current short position, I'm fighting that. Look at Bookmap. I mean, what I see on Bookmap is 850. So that's the point of control. That's that yellow line above my head. The longer we hold below that, the more confident I am on the retest of 800. But from there, I have no idea. because SPX 45 is a big, like, if I was being smart and not hopeful, I would be scaling out at 45. I would scale out one at 45. I would scale out the other at 20 is the smart way to do it. But based on how much these accounts are on the ropes, I'm kind of wondering, can I get lucky and actually break the support at 45 and ride both to 720, which would be snapping 800 and potentially going to like 500. Like, even what is 50% of this range? Even 583, like I'm not even saying giving back all of yesterday, like even 50% of it is at 582, yesterday's high to low. That's maybe not the worst target level. That would be like a high majority of my loss on the day. Well, am I getting lucky? We're coming up to 800. We did snap 480, rejected at the 50, rejected at the 50. I should probably move my stop down a little. I almost want to cancel this order just because it's kind of messing up the chart. We're saving ourselves. We didn't crack it quite yet. All right, this light blue horizontal line is the overnight low, and then obviously the current session low is the top one. So current session low from 9:30 till now is like 788 roughly. It is 788 exactly, and then 776 is the overnight low. I'm curious there. We're getting another bounce at 8 off of 800. That's currently a higher low, but we are also getting lower highs right here. We have this succession of lower highs. So I'm watching to basically see how this plays out. My stop is in the money, 800. So I'll get a fifth of that, 160, which gives me a little bit more breathing room if this thing has a big bounce. But I'm at the point where, like, these were down 1,700. The blowout is at 2K. I only had $250 of wiggle room. I got lucky on one trade that unfortunately just didn't go to all the other accounts. You can see here the top 6 are only down 1,000 because I caught a trade that just, I guess because I didn't have the market order on, just did not work, which is hyper unfortunate for me. But if they were all the same, I would only be down 500, which is completely manageable. So as much as the bad trade was, the next trade I did, oop, here we go. We just took out the overnight low. We just took out the overnight low. And we bounce off of it. Remember, buying at the overnight low, right? Did I draw it? Right here, this bottom one, that's a strong play. You're in at 776. You had 10 points of risk and you're already up. Now, that's not something that you want to necessarily swing for the rest of the day, but look at that. You got some points off of it. I'm wondering if it can actually fail. I'm wondering if it will actually fail. And now, oop, my next level of interest, if this low is taken out that we just hit, so we don't really need that. We don't really need that. You guys understand it's just below 800. I'll set an alert. Why is this not working? All right, I'll set an alert at the current intraday low to know if it vomits or not. Like I said, dude, buying at the overnight low, it's a strong play. You're already up 50 points, risking 10. The question is this, I mean, I've already explained the full thing. I know that's a long strategy, and I'm just hoping that the pain from the long strategy is not much, and we end up cracking it. Like, I called it out. We hit 763, 776. So you had, at your most, your risk was 13 points on this particular play. It's a strong play. It really is. It really is. I'm just looking for the failure of said play. Fuck, dude. Wait, what was that? Oh, we did tag the close. Shit. I really should have been out there. I didn't realize that simultaneously SPX hit its green to red value. Fuck. No, that was, I don't know what I was doing. I wasn't fully paying attention to everything I should have been paying attention to. Like literally we're tagging the overnight low in NQ, which we've done the stats on, and we're tagging the closing value on SPX. Like very evidently a scale out. Very evidently, like it's screaming scale out level. And now I just need to pray that we don't bounce 60 more points all the way to 891. I told you to get out at 790. There was nothing special at 790 at all. The level, the levels are here. It's 97 and 76. There was nothing at 790 specifically. But now that we've bounced 80 fucking points. Fuck, that was... I just would have never been in this position without that stupid first trade. I would have been riding this. I would have had, honestly, I would have put it about 5 points above. I would have been at 80 or 85. So I would have filled in one. The other one would be at break even, and I would step away and go. Like that's how I would have handled it if I had multiple contracts. The issue is I do have multiple contracts. The issue is that I really need these multiple contracts because they haven't been tested yet to really work. But the issue is the farther you go, then there's an argument for mean reversion and potentially bouncing off support. So trying to get lucky with that capitulation when you're carrying size, it could hurt you if it bounces back because then you didn't get any money from it. So it's like, it's just a higher risk reward way to play it. It's either going to work out phenomenally and you catch a big vomit, or there is not a big vomit and you ride it all the way back. And then the green you did have, you just lose it all anyway. And the way this works from a Furu Guru perspective, the way this works from a hindsight bias perspective is whichever way it plays out, you're like, oh, I should have done that. I should have. But that's you with hindsight bias, knowing how it plays out. No one here can confidently say, okay, that's the bottom today and we're bouncing and you need to get out versus no, this is just like another little dead cat bounce that we've seen already like 4 or 5 times and just give it time and we're actually going to capitulate all the way down to 500 today. You don't know. It's always so much easier in hindsight. Even yesterday, I was in at 545. I was long at 545. I got out at 565. I took 20 points and I was explaining that because I was like kind of down, kind of up. And you could watch the stream from yesterday. I was explaining it. I was like, obviously, I'll be frustrated if this runs to 750 because the target after that is 30,000 flat. And what did we do yesterday? We ripped to 750 and then the high 900s. And I could have taken hundreds of points. And instead, I literally only took 20 points off of it. Like, you just don't know. It was a big runner of a day. And anyone who held it that long, congrats, like you deserve the money, but it was still statistically an abnormal play. Like what happened yesterday does not happen it's like going all in on 7-2 offsuit. And can you win? Yeah, but your odds are very low. So sometimes the low odds situation does play out. You have to accept that. And what I'm kind of hoping for now was it was high odds to bounce off of this, as in it was a good long. So if I was really shrewd, I could have taken my short profit there, gone long, probably locked it in roughly now and try to play it back to it if I was being a bit more active. But like I said, I'm playing for my heels a little bit because now that I have a trade that's in the money, I'm just trying to see if I can get lucky. And it just keeps riding in my favor. If you're a bit more active, well, then you're risking once again going into your buffer. And I'm seeing that like I'm kind of on some of these. On the MFFs, I'm doing my job to get myself out. But as of right now, your buffer's 2K. I've given back half my buffer, unfortunately. If this flushes again, then I'm about 50% buffer. And if I man up and do the right thing and trade MNQ instead of NQ, if I trade the micros instead of the minis, I have a shot. But the accounts are in such bad shape that I feel like it's almost worthwhile to hold on to see if this can crack 763. Because if it can crack 763, then we're in a very interesting situation where the 30-minute NQ might be cracking, and talking about that 50%, that's 584 and then 500. Like I'm wondering. Now, not likely. Once again, as a person who studies the stats of this, it is far smarter from a risk reward perspective to go long at 750. I am praying that we are in the abnormally rare bucket and we crack it, and I can ride this either to 580 or to 500 flat. I believe 500 flat, my accounts are actually green on the day because I'm short at 930, so that's a 400-point return. So I manage my risk. My stop's in the money to the tune of 40 points. And other than that, fingers crossed, and I'm praying that it goes. Yeah, I needed to crack 750. But I do like the lower highs. How's options flow looking? SPY is selling off. Mag 7 is getting hit again. So I'm on the right side of options flow. Dude, that was such an obvious scale out level. It happened perfectly together at 1118. It really did right here. The 1118, we hit the overnight low. We hit the closing value. Perfect level to take some of those gains and perfect level to go long. And you got a decent amount of points. And it happened all so quick that I just wasn't set up to be able to scale out even one of mine. So now I'm hoping that it is a dead cat bounce and we actually legitimately vomit below it and go to 725, which would be right here, the next positive gamma node. It's also the spot gamma implied one-day move low. If I really wanted to be degenerate, I'd be playing it back down to 7,700 flat. That's like the ultimate reach target on the day. It can go. You never know. I find at 10:30 it starts to trend up. It does 50% of the time. If you think at 10:30 more often than not we're trending up, well, first of all, what time frame are you looking at? The 1 minute, 5 minute, 10 minute? But also it's 50-50. Any intraday analysis effectively boils back down to 50-50. And it's also 11:30. That was an hour ago. But if you're finding edges in intraday trading, it's like a 5% edge. So you're like, okay, instead of 50, it's 55% of the time, which that means 45% of the time you're wrong anyway on it. All right, come on. Let's see. Can it crack? SpaceX is actually showing a little bit of life. All right, we're going back down for a second green or red test. The SPY is slightly green. The Qs are holding red. Blame the tilt? No, worse than that. It's one thing if you get tilted because that's a very emotional thing and like whatever, we all have emotions of it. Mine was a stupid fat finger mistake, and it would have been awesome if I did the fat finger mistake and it went my way because I would have been going my way double the size. But whenever you do fat finger mistakes, it almost rarely is a winning trade. Like that's just how the market gods operate. If you're accidentally trading with too much size, the market gods love to punish you. They really, really do. And you're seeing it now. I mean, the trade I caught, I'm up over 100 points. I'm short at 930. It's trading at 8. I'm up 130 points on this trade. This is a phenomenal trade. And unfortunately, I just don't have good exposure to it because I didn't have the room to play it properly. I need to pull out trade like one of the best trades possible, a 500-point trade just to get to break even because of the stupid sizing issue. Another bounce off of 800. Jesus. I could move my stop 80 points into the money. It's not a bad option. Not a bad option. All right. Well, I need to think about this and chit chat with the Discord about this particular play. So I'm going to drop, obviously, before I let you go, shout out to TPT. They are the partner of today's show. Use that code Goonie. Daily payouts, no activation fee, no consistency. That's why people like it. That's why so many of you are so fond of TPT. So use that code Goonie. Once again, pinned to the top of chat in the description of the video. Kind of as I alluded to, I'm going to go try to salvage this position. You guys know where I'm at. Just to recap, I am short at 29,930. I think my break even on some of the accounts is at 700. Some of them are at 500 because of weird mismatch baloney, but it just is what it is. So I got to take this in stride. And what I'm looking for is a legit crack. We're at key levels of support. Not only do we have the closing value on the SPY, but we're also now at the 30-minute 50 EMA on ES and NQ. So very important levels, and it is support. When you come to support, it's a key level you got to pay attention to. There's not really odds in terms of the likelihood of bouncing or breaking, or I guess rejecting or breaking out at support or resistance. It's more of, it's 50-50, but the way you want to look at it is just key levels where a new trend might persist. So we're at support right now, and obviously we could easily bounce off of it, and the bullish trend could continue. I'm, fingers crossed, knock on wood, looking for it to get rejected, or I guess to break down, to get cracked, and to go to the next level of support. So we'll see. It's not necessarily my favorite play. If I was not in the position I'm in, I would have been scaling out multiple times already, and I would not just be arbitrarily hoping, as literally as I'm saying this, the market just ripped 60 points. So that sucks for me. All right, folks, that's what I have for you. Like I said, I'm going to go manage this, and we'll see. But to be clear, my stop is already in the money. So I'm not losing money on this play. The question is, how much money am I making on it to dig myself out of said hole? That's what I have for you guys. I appreciate all the good vibes. I'll catch you on the flippity flip. Peace.